This conference will now be recorded.
Right, before we begin, we must provide a disclaimer that the following information provided is not investment advice. Our methods, teaching, and content are for educational purposes only. All materials and lessons are protected assets of market making strategies. With that being said, just want to say welcome to everybody. This is our first psychology session on trading in general. Psychology of trading doesn't simply apply to our method of trading, it applies to all trading. In fact, psychology overall is so interconnected that the state or level of your mind is going to be the foundation and basis of how you apply yourself to pretty much anything you do. The thing I always say about psychology in trading, something that took me 10 years to understand myself, is I say to everybody that the stock market is a mirror into yourself. When we are trading, when we are trading our instruments in the market, the way we got to look at it is very simple. Unlike a business where you have employees, teams, vendors, you have people that you're working ancillary with. There's so many other areas, including not only just the people you work with on your teams and co-ownership and so forth. Now you're dealing with competition, you're dealing with external factors like environmental. There's so many different factors, even the economy, that can affect performance of your business that aren't always in your control. Now, given we can always mitigate, we can always do our best to make sure that we're ready for bad times and so forth. I mean, I've been in hotel business for 25 years. I've been in med spa wellness centers. I've been in food. I've been in all types of different industries, and I've recognized the struggles and the beauty of business. But one of the things that was always interesting to me when I became a day trader is how quickly the ball stops with us. If a trade is going bad, if our day is not going the way we would like it, if the week is not going or the month is not going the way we would like to see it, we so quickly get agitated. We so quickly start pointing fingers and saying, oh, the market's this, the market must be rigged. I have had a tough week. I'm not doing too well, or whatever the case may be, the emotional response when you're a trader accelerates. And it accelerates because there's no one else to blame. There's no one else to put judgment on. When you own a business, you can say, well, we've been doing everything correctly. Me and my team are doing everything we can, but the economy is not doing great, or there's so much new competition in the area, or whatever the case may be. And that way, one of the things that we love is when we can give excuses to our grievances, they're far more accepted. And that's just something as we are as people. So when you come to the stock market and you don't have any of those excuses, because the reality is, if you look at the complete funnel or connection of a trader to a successful or to the stock market, it starts with you, how you're disciplined, your habits, your time you spent learning and analyzing the processes for your particular trading style, and then obviously upon your execution and how you manage yourself before a trade, in a trade, and after a trade. But if you've noticed one thing I've said, it's fundamentally everything is rotating around you. That makes it a blessing and a curse. It's a blessing because now we are in full control of our fate as traders, and it's a curse because if you have not worked on your psychology, if you have not worked on your mental setup, then it could be a huge detriment to your progress. So I always believe that prior or during the development of you as a trader, the most important part is the amount of effort and work that you are putting in to yourself, to your psychology, to creating the correct approach, the correct mind frame, the correct habits. These are the most important aspects of a trader. So going back to just what I've just told you, and Sid is saying, I hope you're feeling well. You still sound under the weather. I thought RGTI will cure that. Well, here's the reality. Let me explain to you how disciplined of a trader you need to get to. The last few days, I've not been feeling well. I've been feeling under the weather. My head's been congested, extreme cold, extreme body aches. Guess what that means? I'm more than happy when I'm not 100% functional and I'm slow and I'm not quite seeing things, or I have to get up and what might have you, is watching and always being a student and realizing that for me to execute the best I can as a trader, I have to be the best I can. So coming in, whether that's you're not feeling well, you're stressed out, you have some personal or business issues that are on your mind, you don't have to trade. And if trading gives you peace because you can make money, that's even more scary, because the outcome will always take care of itself as long as you are correctly prepared to meet that opportunity, which also means not only psychology, but just overall, are you mentally there? Are you healthy? Are you feeling well? Are you in the right place to trade? And if you don't feel you are, and some days, like everybody, we're all human, I'm not feeling well. I might have a very stressful day from other things and I'm not quite able to connect the mind. I will sit back and wait. I have no problem doing that. So today, although we saw RGTI moving and so forth, it was one of those days where I am just not feeling my best. So although I'll call it out and speak on it, I might not trade the type of shares that I want. I might just trade something so small, and I mean small as 1,000 shares, and just enjoy trading. But more importantly, respect what trading requires. It requires discipline and it requires good habits. So with that being said, I was going through all my notes and all the exercises and everything that I've written out that has helped me progress as a trader and take me up towards those steps and finding a stronger foundation. And in my folder of all my writing, I found some stuff and I was like, okay, this is actually going to be good to go over. Milan, could you just make this a little bit larger if you could, please? Okay, perfect. Thank you very much. All right, so trading psychology. First point, fear of the market or trade will be what makes you look for the trade to go against your high percentage initial expectation. So basically, you see a trade, you plan it out, you see the controlling prints, the volume, what have you, and you ascertain there is a dollar move in here and it's a 80% trade. If you execute that trade and you're already feeling fear, you're already afraid of your trade, and you've forgotten why you took the trade, who you followed in the trade, and what is your price target, you are already expecting the 20% to happen when you're sitting in an 80% trade that you correctly planned, waited for, and executed to enter. So imagine how detrimental it can be to your trading that you planned it all correctly, but the second you enter, you shifted your mindset and now you're already fearful. The second you go into a trade fearful is usually based upon two things. One, you're not trusting the correct read that you made. Or two, the second you execute it, now you've got money on the table. When you got money on the table, everything starts going around money. The value of the trade is implied through how much you make or lose. That's what you tell yourself. Well, if you execute a trade and you're already questioning it, what do you think your mind is already telling you? That you're closer to trading correctly and seeing an outcome delivered on that $1 price target? Or do you think your mind is now connecting with you that we should be more accepting that there's a great chance we're going to lose 20 cents? What do you guys think? What do you think your mind is more happy to connect with if you're fearful upon executing a trade? I need everybody to participate. Remember, one thing I told you about my teaching, it's not lecture style, nobody learns. The latter, absolutely, Trevor. Your mind is going to do exactly what you tell it to do. And your mind is also going to then give you to a strength exactly what you're asking for. So if you're asking to be fearful of your trade, what you need to recognize is the first time that fear comes in, it's always a monetary fear. Because the second you put money on the line, you got fearful. But prior to executing the trade and having any money on the line, you were strategically and correctly planning your trade out. And sorry, can you hear me now? Apologies, I'm not sure what happened, but it put me automatically on mute. I think that's probably Millen putting me on mute. Okay, so all I was saying is, as we go through these points, I've realized in my folder, and I have a folder just for psychology, I have so much quality content that I've created over the last 7, 8 years to share with you all. I do not want to rush this. I want you guys to have the complete plan, the complete foundation and structure of how I got there. And I always believe, and just to go off topic for 1 second, you see all of these coaches out there and all these people out there who are telling you how great they are once they get there. But what does it matter how good it looks once you're there? For somebody or for people who are trying to make their way towards that area or towards that outcome, they want to know, how did you get there? We want the truth. We want the honesty. We want to know, what was your mental lapses? What was your mistakes? How did you overcome? What did you need to change about yourself in order to be such a consistently good trader? That's what the key is here, right? I'm assuming you guys don't want to just hear about how well I can trade, but what did it take for me to get to that, how well I can trade? And that's what I want to take you down this whole road and journey that I took. And all I can tell you is, the reason we moved this to 115 is when I started looking through my file, I couldn't believe how much gold there is in there for you guys, and you're going to love it. So what I was saying is, at any point, if you'd like to stop at one of these bullet points and expand further, please feel free to stop it. I am not bothered if we didn't even get past 1 point. I want this to really come home for you all, and I want you to really understand exactly what I'm trying to say here as well. So that was the first point. The second point, knowing that you will take losses within your strategy will eliminate fear as long as you take the loss and move into the next trade. This is a carry on from the first point, but something that I always tell you in the morning meetings before you start. When you created an expectation of an 80% trade, that means you also accepted that 20% of the time that trade doesn't work out. Now, that does not mean to say that 20% of the time you read the whole trade wrong. I'm going to assume that is absolutely not the case. But what do you think that 20% of the time for the most part implies? Put your hand up and then Miller will put you in.
It's
Ah,
simply
perfect,
the
Kevin. No need for a hand. Bad entry. And that's typically what it is. It's typically you've planned it correctly. You're seeing the right thing. And I tell you why. Do we usually see an 80% trade wrong if we're looking at it correctly? So if we know what an 80% trade looks like, for the most part, have we just completely got it wrong that this is not a high percentage trade? No, absolutely no. For the most part, we know it's a high percentage trade, but as Kevin correctly said, you just probably had a wrong entry, which means wrong timing. Now, when you get that first wrong timing, And on this one, I would like to go back and forth with someone, please. Can someone raise their hand? Because I'm going to put you on a spot here that's going to be brilliant for you. Who can come on here real quick and speak with me? Because I'm going to ask you a few questions. Come on. You guys want to learn? You want to be great traders?
Hey, Doug.
Anytime I ask you to speak, you should be jumping up and saying me, me, me. Okay,
Hey, Doug.
Trevor.
Yep.
Could you let Trevor on, please, Millen?
Can you hear me, Doug? Oh, hold on. Can you hear me now?
Oh, I can't hear nothing. Hold on 1 second. Hello?
Hello?
There you go, Trevor. Sorry, yeah, I was definitely having some technology issues today, but okay, right. So, Trevor, I'm going to ask you, let's say you plan an 80% trade, and in your 80% trade, you have it all planned out. You're not wrong. This is certainly an 80% trade. Your first entry wasn't the correct entry. Your timing was just a bit off. And I'm going to make this even easier. It was a take bar. So you saw the buying. It goes into phase two consolidation of acquiring. Volume comes in. You needed 1 million shares. You planned and you anticipated that this is the type of prints that you want to see, the start of the volume you want to see. You actually validated it, you wait a few more seconds, you enter, then you realize quickly that this was a huge take bar. Let me ask you something, Trevor. On a huge take bar in between a consolidation, is that typically going to be the release?
No.
That's just going to be a take bar, right? That means that
Yep.
somebody says, I want a lot of shares. What does a take bar in that predicament actually mean to the trade?
It further validates it. So I would
Yep, perfect.
I would increase it to a 90% trade at that point. You know, it's an extra 10%.
I wouldn't do that. And I'll tell you why I wouldn't do that. An 80% trade does not go to 90% just because one other person took more shares. There must have a 90% trade would basically mean everybody's taking the shares. Does that make sense?
Got it. Okay.
It's not enough to so here's how we got to look at a 90% trade. And it's a good question you brought up. I mean, a good thing for me to talk on. 90% trade means unequivocally it can't do anything else because everybody's rowing in the same direction. If one person has a take bar, that's just one extra person rowing in that direction. Yes, I absolutely agree with you. It 100% validates it further because now that person is insisting on taking a bunch of shares as if they're saying, I don't know what time this is going to move or when it's going to move, but now I have clearance and I want to make sure I get my shares. But usually with a take bar, what does that say about the range possibilities?
It increases the range.
Increases. So now you took that take bar, Trevor, and you planned it correctly, but you didn't realize it was going to turn into a take bar. So you had to take a loss. Now you took a loss of 15 cents. What is your mind straight away now saying to you?
At this point, it's saying that I have to pay for confirmation on the trade.
Brilliant. I absolutely love that answer. Now, paying for confirmation is something that I've taught you and something that you are being diligent on now. And what a great addition to your habits. But prior to you understanding that I just need to validate a little bit further to make sure my next entry is good. And typically, what do we know after a first entry that you thought and that you validate a second is that the second entry typically works in your favor because it's still doing what you expected. And now that you're validating it, you're looking for a bit more. But prior to that, was there ever, oh, I'm wrong, this isn't the stock, that was the right move, how can that now have gone? And then you start becoming fearful, one, of your next entry, or what's the other thing that everybody's more than happy to do?
Overtrade.
Overtrade, that's right.
Mm-hmm.
You're going to start saying, no, it's got to go, it's got to go. I don't want to, I just took 15-cent loss. I got to revenge trade and get it back. Okay, this is it. This is the one. I'm moving. All discipline all of your smarts, trading logically and correctly goes out the window so quick. Because all you're going to end up doing is sitting there. And now your emotion-based trading kicks in. And emotion-based trading is great for who? You or the market maker?
It's great for the market maker.
Write that down. All of you should write that down, because then that will keep you so humble as a trader. Emotional-based trading is good for the market maker, bad for you. And that is something you guys should definitely So, if we go from that part, and thank you, Trevor, appreciate that.
Yep.
So it's easy, number 3, easy to then get reckless, emotional, fearful if you don't have the right entry strategy, mental stop loss, acceptance of risk associated with the trade. And that's what it basically comes down to, is understanding that you must have accepted that part of 100%, the 80% is only part of 100%. So we have to apply an understanding to the 20%. The 20% does not typically mean that you didn't correctly see the trade. It's just your entry wasn't correct. So that means you should still maintain always your discipline and your habits and remain logical on the information presented in front of you. But now you need to add one more underlying, one more variable. And as Trevor correctly said, you need to pay for validation. What does that mean? So let's say the entry was above 4 and the price target was 5. When Trevor entered, he had himself at 4, I'm going to make this up, 417. So his level 2 was at 417 for an entry, and he entered, he saw some buying at 408, 411 and entered. And he took that loss because it was a take bar. Now, in the same instance, the next one comes. Now he knows, okay, we've clearly got the buying. Trevor's saying, I'm not looking for buying, but I do want to make sure it's the correct type of alignment that we would need to see in a release phase, and not the type of alignment that's just them buying everything in a take bar. So what he does, he says, I'm going to move my level 2 to 421. I have a whole dollar of room, so I have plenty of room to go. It's moving in 50-cent increments. And he sees buying coming back in, and he says, well, this time I know I need 500,000 in volume, so I'm going to have to see a bit more volume, see the alignment correctly within the substance, and I'm more than happy to execute even at 421. That's called paying for validation. So he's 100% correct. Winning and consistency are a state of mind. Take what the market is offering, not trying to get what you want. That is not a strategy, but more of a greed of need. So even when we are in trades, how many times in the last few weeks, and I say it all the time, have we seen since the election month, so basically in September, in the last few weeks or even more, how many times have we seen cheap stocks show everything we want, even all year, and then they fall off? The volume isn't enough, and they just completely retrace, and you see these sometimes ugly bars, or it just goes sideways. We've seen that a lot this year. What does that mean? That means that we see the buying, and we have clearly and correctly formulated the price target for that buying. But if the volume needed for the market makers is not going to be present, then they're not going to be able to meet their price targets. So although you're not wrong, the price target that you created for that buying, but if the available volume isn't what they need, or if they choose that, yes, we will get there, we just don't want to get there today. We've got far more acquiring to do than what you first anticipated. At the end of the day, you can't get frustrated at that because you are, in the end, and I'm only talking about, and in reality, this can apply to any form of trading. Because if you can't move the market, if you can't move a stock, then what are you, no matter what? And this is to any strategy, options, swing, um, forex, crypto. I don't care what you do, technical analysis. No, not retail. I said if you can't move the market as a trader, but what can you define yourself as and do correctly and still win? Follower. We are followers. Every single person who trades is a follower. Unless you're a market maker, unless you can play yourself in the bid and ask and have billions of dollars backing you, you are a follower. So when you're a follower, you can only take what the market is offering you, even if it doesn't get to your price targets. So understanding, as I always tell you, what does it look like for the prince that you're about to follow in to get to their price target? What type of volume would we seek? Is there any levels that you can subject itself to pullbacks? Understanding and mapping out exactly how a trade gets to your price target correctly not only allows you the comfort and understanding to manage that trade correctly, but if you see that important and integral parts of that strategy to get to your price target are not there, then that makes it even easier for you to realize that I have to take what they're offering currently because they're not looking to meet the target yet. Does that make sense to you all? Perfect. So with that being said, how do we stop emotion from entering our mental process? You've got to accept the risk as part of the trade. Great day traders do not feel any threat in the market they need to defend against. Never personal, never an attachment. Simply a method is used to extract the profits the setups allow for. It's no thinking involved. Once you understand how trades work, you apply, you plan, and then you follow the plan. And why do we want to be that logical? Why do we want to be systematic? Because what's the one thing that will never ever help your trading that I've said non-stop? It begins with E. Type it in the chat, please. Every single person type it in the chat. When you type it out, say it out, it becomes an action. Actions hold multiple times more strength and ability to stay within you and incorporated in your thought process. Now, emotions in business, emotions in life don't hold the same value as they can in trading because that one word is synergistic between you and your trading. That one word qualifies you or kills you as a trader. So emotions plays the most pivotal role for a day trader. So keep those emotions away. They're not needed. If you want to have emotions, every Friday at 4 o'clock, when you look at how your week went, get up, go mental, jump all over the place. Appreciate your hard work and efforts are paying off as you should. Go enjoy your profits. Take mum out for dinner. That is absolutely deserved because you generated that outcome and you stuck to the process. Now, if you looked on your Friday at 4 o'clock and it was a roller coaster of a week, what should your emotional response system be? Well, reflecting. Great answer. Understanding why, great answer. Ask why. Looking for the next trade. Can't get emotional about either wins or losses, which is absolutely true, Kevin, and we're going to go into that. But going back to a bit more of what Trevor and Millen are saying, we got to remember one thing always. We are always students. We are always learning. I am always learning. Do you think, so let me just get through this part first, but it's no emotions. If you've had a roller coaster week, enjoy. You have much to learn and you can only improve. Take the emotion out of it. We don't need it. Get logical. Break apart what areas of concern you had in your trading and how we can improve from them. Okay, so now on the next side. Opportunity. We trade because we recognize. Hold on 1 second, Millen. Opportunity. We trade because we recognize an opportunity to make money. So we play and trade opportunity. If it fails, it simply is taken in stride and we await the next opportunity. You are ahead of me, Kevin. That's where you are. Excellent. After a few losing trades, a trigger occurs and an opportunity arises. Do you see the signal execute? Do you avoid and look for the 20% chance of it failing as a stronger number to recognize? How do we end up backing the 20% over the 80%? Becomes an emotional recognition of fear. So that's basically going back to what I was saying, is if you allow your mind to accept the value of 20%, then only thing that you're going to leave with that trade is what happened in that 20%, not the fact that you correctly determined an 80% trade and all you had to do was work on the management of that trade and the emotional response systems that you had with managing the trade. And that's the scary part for all traders. How many times have you all took a trade? For that trade itself, it didn't quite work out. But you didn't just say, this is still an 80% trade. I will sit, wait, plan for my next entry. And instead you got frustrated. Instead, you started losing your track, losing your composure. Next thing you know, and I'm talking minutes later, it moves and it goes right to your target. And as it's going towards the target, now you're in a whole conundrum of anger, frustration, FOMO. You're saying, should I jump in? There's 20 cents left to go. I was right. What happened? Does that sound familiar? Very familiar, right? David A., you're right. It's a rite of passage, but let me tell you something. The more times that you allow your mind to curate that response after your first loss, when that compounds, it becomes a very strong what? Habit. Anything you do consistently, good or bad, will compound into a habit. So, reckless is one of the biggest strengths of humans. I repeat that. Being reckless is one of the strongest for humans. Why? Because we forget that the more we allow ourselves to accept mistakes, accept that our emotional response system is now trading for us, your mind will just equate that to, well, he loves this, he accepts this, or she accepts this, this is how they trade. Perfect, let's form a habit. How easy is it to break a habit? It's actually not. It's an interesting thing here. I wouldn't say it's easy to break a habit, Kevin, to be completely honest with you. It's proven it's absolutely not easy to break a habit. But if you go back to what I'm saying initially, the reason it's not always easy to break a habit is because you created it. How many times have you looked past yourself and questioned why you're doing something without realizing that you're the reason it's there. That is a habit that you created. That's information you sent to your brain and said, this is acceptable. Your mind leads, you lead your mind. Your mind doesn't lead you. Who thinks their mind leads them? Or who thinks they lead their mind? Or who thinks they don't know? Exactly, David. The mind is never going to lead. The mind is quite simply the most powerful. So your mind is 10,000 times more powerful than the most powerful computer. Quantum computing doesn't have a thing on how much capacity we all have in our mind. Which again, imagine having access to the greatest computer in the world. You feed that computer the wrong information. Will it weaken the stance or strengthen the stance? Strengthen the stance. If you feed information to the best computer in the world, it will strengthen the stance. It will strengthen the habit. No, it's okay, David. No, okay, maybe I didn't say it correctly. So, what do we have to do? Let's take a second here and stop. What do we do now in order to not strengthen that bad habit? Well, we have to take a variable away that it relies upon for that habit, correct? It's relying for that habit to exist. It needs the presence of the emotional response state. So your mind has said, as long as I get these emotional responses from Doug, where he will get frustrated, he will act in FOMO, and he will allow his emotions to take over his trading, then we know that habit exists, and let's put it to the forefront, because this one he always accepts in that particular moment. As I'm saying this right now to you and explaining to you how our mind works in contrast to our trading, how many of you right now are just like, oh my word, that is so true, and I didn't really think about it like that? How many of you have been being so tough on yourself, being so tough on people around you, being so tough and imparting on everything else that you didn't realize that it was quite simply the ingredients that you have consistently given to your mind and said, I want you to personalize a habit for me. So every time this moment occurs, I want you to kick that in. How many of you thought about it just as that simply? And feel free to come on. If you feel like you want to talk to me about this, I would love to go back and forth, and it will definitely help all the other students to gain a bit more clarity. David, you want to get on? Always had great conversations with you, David. Sid, Millard. Is that you, David?
It is, Matt. How are you?
I'm doing well, sir. How are you?
Very good, thank you.
Perfect. So, you know, we've just for everybody who's new to the room, I've done higher level advanced day trading classes for 3 years now or more. I don't even know how long it's been. And David A has been a great, consistent student who I've seen so much progress with. And a lot of these conversations are not new to him, but he can also help you because he's going to have to impart some of his experiences. So just going back to it, David, every time that's occurred and you've gone back and thought about it and said, right, why am I consistently having this situation and I'm hitting this wall in the management of my trade? When you go back and you think about it, do you think about it in the basic stance of, if I just recognize that my mind is simply doing what I've told it to do, and I need to change the variables in order for it to create a new pattern, I can get out of this and get back on track and move in the right direction? Because the reality is this: the more that you don't understand that the variables need to change, as I told you earlier, all you're doing is strengthening the stance of that habit. So you get into a trade, you take a loss, now you get reckless, now your emotions kick in, Now you're saying, oh, what is this? Blah, blah, blah. The stock moves. Oh, man, I knew that was going to happen. All right, let me get in. Why? Because it still has 60, 70 more cents. I'm going to give you one quick example of how that doesn't work. If you're a day trader, I would have to assume that one of the things, and not everybody does this, but one of the things that we do, and not just as day traders, it could be any form of trading. I'm going to assume for you swing traders, option traders, technical analysis traders, that you do have a hard stop, right? You know how much you're willing to lose. You should know that. So let's just be specific, David, as our day trading, what's the max that we typically we don't want to lose more than? Let's just say 20 cents, okay?
Yep.
So if you're saying to yourself, right, I don't want to lose in a trade more than 20 cents, I am going to be very, very disciplined in making sure that I control my losses. Because if I don't control my losses, how am I ever going to approve or achieve my wins? Because there's two states of mind. The one that accepts big losses and the one that wants to accept big wins. So the one thing that we always try to do is if better control my losses, one, because I don't want to blow up my account, and two, the mind should be focused on maximizing the opportunity, not maximizing the mistake.
Sure.
If anything, that's another one you guys should just make a quick note. You want to, in the end, our minds want to maximize the opportunity, not the mistake. So let me ask you, David, if you got into this trade, right? So we know it's consolidating in phase 2 at 4. It's going to go to 5. You got in at 417. It was a take bar, the same situation as which I was talking with Trevor. Now you're like, oh, come on, I know it's going to go. It comes right back to 4. Bit of volume, stays there for 3 or 4 minutes. Now the volume's kicking in. Now you're like, okay, this is the type of alignment I needed. I'm seeing a 2 to 3 print personality. I'm seeing the correct volume. The last one was a take bar. That only added to a condensing the time frame of when this is actually going to move into the phase 3 and release. So you say to yourself, okay, this is it. Now what you didn't realize is you're actually emotionally trading, because now you're getting confident. Now you feel that your read is right. You put yourself, the stock's at 427 and you enter. What's the problem with that?
You've shifted from following a process and having the discipline to now being fixated on an outcome.
100%. 100% you're outcome based. But number 2 is this. Let's just say that you are very, very diligent, that you won't take more than a 20-cent loss. And this pulls right back to over 6. What does that do for you?
And it makes you start to doubt yourself.
It does, doesn't it?
I think it's one of those things where process must always come first. And
it does,
I
but
think
do you see,
Sorry,
even when you're speaking right now, you don't have an answer?
Sure, yeah.
So this is just how I'm trying to teach you on the psychology aspect, because there's a few things you're thinking. Knowing you the way I know you, and I can read people really well, I'm going to assume that you just pictured this chart. You pictured 427, you pictured 403, and you said, I'm already above a 20-cent loss. I might just get out because that's broke my 20-cent loss. And then you're going to say to yourself, in 2 trades, I'm down nearly 40 plus cents. What's that doing for you right now?
If that was a scenario, it starts to impact confidence in terms of your read and the discipline that's needed.
Yeah. So now, if you went straight into logical, went back into your strategic mode as a trader, you say to yourself, I'm still not sitting here going to accept more than a 20-cent loss, but I know whatever I enter in, I have to allow it to hold 4, especially if the way that you've strategized your trade, that 4 is a holding level. whatever you do, you can't let it not test for, can you?
No,
But the
no.
reality
So
is, yeah, but the reality is psychologically, you haven't set yourself up as a strategic trader at that point. You're setting yourself up as an emotional, outcome based trader who doesn't want to lose his read. You see, most of the stress that we come when we don't get our trade right is not because we didn't make the money on it, I hope. It's because we didn't maximize on the correct read. How many of you have been more frustrated that you didn't maximize something you waited for and strategized correctly than the outcome of not making money and losing a little? I'd love to know that answer from you all.
yeah, that can be really frustrating sometimes. Like, I mean, obviously, you've got to have a certain level of understanding, but yeah, the thing I'm focusing more and more on is like, how could I have maximized that trade? How could I have, read that situation better to understand how I can maximize?
Can you maximize the opportunity if you haven't learned to maximize your mind?
No, no, that's a prerequisite.
So is that maximizing of your read for you yet? I didn't say it's not going to happen. I'm saying, is it ready for you yet?
Oh, so it's a work in progress for me.
Now, when we look at the people who can maximize the opportunity, it honestly comes down, and I will repeat this many, many times. Most people will learn the fundamentals enough to be a very good trader. Most people can easily learn the fundamentals of trading to be a good, consistent trader. So it's not that we can't get the theory down. The part that we can't get down is us. That's the hard part. The hard part is you. So for all of you right now, going back to what I was saying about the message from Sid earlier, I trade basically one or two trades with very, very little shares when I'm not feeling well, when I haven't been able through meditation or through whatever it is to clear my morning mind of any stress or any pressure I'm receiving from other things, that I will have no problem just sitting there with very small shares, if not no shares, because I'm not prepared to meet the opportunity. How many of you can say you're willing to do that?
That's definitely something I'm noticing more and more. Where I've got a lot going on personally, so if I can't bring my mind completely to it, I think in the past I would have, still jumped into trades. Now I'm sort of creating that space to just observe if I'm not completely committed to the process.
Yep. And what you're going to find, David, and I think I've told you this before, is one of the things, if you remember, David, that I would speak to you all about was when you get to your platform, it's either going to be two things. It's going to be a well that takes from you nonstop, or it's going to be a fountain. And the only way that it stops being a well and becomes a fountain is how do you feel when you come to your platform? See, you can't help whatever's going on in the external, but for me now, being a trader allows me to step away from all the other stresses and headaches. This is my freedom here. This is what I enjoy. So you're going through the correct procedure that I went through, that if I'm not mentally prepared to be at my computer, then it's fine. There's always tomorrow. There's always the next day. We don't come here. We do not validate ourselves as traders because we show up every morning. You're validated as a trader because you trade correctly. How many of you believe you're validated as a trader by showing up and being on time and taking a trade? Or believe that you still allow yourself to believe that to be true? How many of you? How many of you realize that being a great trader or a really good trader is that you take the business of trading and respect it? and you show up when you're ready for it. You learn to be more ready for it. I went through the same stage when I was a trader in my early days. I swear to you, for many, many years, I would come, I would have anxiety. My right hand would shake in the mouse when I got closer to the open. I was a bit fearful. All of that is very simply and quite simply me absolutely not prepared. I find no confidence in myself because I haven't done the work. All I come to do was, as you can read in here, gamble and hope. Nobody I know consistently had a successful career or life gambling and hoping. Just like in sports, when your favorite basketball player has an injury, does he show up? Does he play? They might not even play in the finals because a 50% Kobe Bryant, is that the same as 100% Kobe Bryant? As great as the man was, is a 50% Kobe Bryant the same as 100% Kobe Bryant? I'll ask another question. Would someone off the bench who's nowhere near as talented as Kobe, but can play in that position and is 100% healthy, would you, percentage-wise, would it make more sense to put him in than an unhealthy Kobe? Which goes to say, we're never going to be healthier. We're never going to be better than the best version of ourselves. You are also a percentage when you come to your platform. If that trade in front of you is 80%, is that because of you reading it 80%? Or was it always 80%? What do you think? Not objectively. We're day traders. If I told you this trade in front of you is 80%, is that because I like it as 80% or because I can read it and tell you this is an 80% setup? So it's always going to be 80%. But now, when you come to an 80% trade, do you come as 100%? Do you come as 80%? Are you coming as 20%? Because you can take an 80% winning trade and turn it into a 20% winning trade just by simply showing up wrong. That's probably the one factor that people just don't consider enough. I bet a lot of you don't consider that factor. Remember, the 80% trade is always going to be 80%. But if you're not showing up 100% ready, that 80% trade can quickly turn into a 20% trade. That means no matter what you do, you are never going to be prepared for it, and you're going to take the outcome that you deserve, and that's usually going to be a loss. Because the reality is an 80% trade, does it have 80% entries? Does an 80% trade have 80% entries? No, not quite. That's not true. Come on, think a bit deeper now. But you don't have to think too deep. The reality is the answer's in your face. It has as many entries as it has. Isn't that true? If it needs to go from 4 to 5, how many entries are you going to have? Is it going to give you 8 out of 10 entries? Is it going to give you 10 entries? No. Because an entry is what? When they're ready to do what? 1, pullback entry, or 2, release entry. There's never that many entries of high percentage in any stock. You could have a perfect entry in a 60% stop. That's going to take you where you are. You can also have very low percentage possibilities in a 90% stop. But when the market maker is ready to move it past this area of build, that's the entry. So always remember that you will be adding or subtracting to what's already existing in front of you. There is no other possible influence you can have on something you can't control. Okay, Miller, move down a bit more. We've already been at an hour. I just want to go to the last one. We'll come back to this, Miller. Keep this for the next week's session because I have so much to go over. And this is nothing. I have more. Please keep going. Just go past all of this. To the last page with the, could you? Yeah, perfect. So I'm sorry that this isn't very clear. We're going to put everything into readable format, Word, Excel. But again, I wanted to show you something that I created by hand myself. So I created this was done honestly about 4 or 5 years ago. I call this the trader development. And if you look at the bottom, you're going to see the 3 stages or parts of a trade. The analytical or the theory. So our mind is required to observe the variables, observe what we see, and see what percentage trade or possibility is in front of us. So we find that, and then the second part is the actual process. It's the management, it's the action taken, the execution of the trade, and lastly, as you'll see after a very thick dark line, outcome. And the outcome is your reward. Now remember, in this game, your reward or your outcome could be positive or it could be negative. You get what you deserve because of what you did in part 1 and part 2. So if you look at the left axis, it's ability. And if you look at the bottom, that's just simply the 3 processes. And if you look at the far right, you'll see consistency. So the way I see is this. If 0 is terrible and 10 is great, and your ability to read, so your development in learning how a 70%, 80%, 60%, what those look like within certain strategies, and you're about 50% there, which means you're still learning. But when you execute on that trade, so you don't know it all yet, you're still above novice, but you don't know everything you need to know yet. But when you execute, you are very disciplined. You are very good. So you're a number 7. You're just a disciplined person that follows the rules. Your outcome will be an 8. It's always going to be in your favor because you're only limited to where you are in your learning in the first part. You personally are a very balanced, disciplined, habit-based person. So your trading process is even better. Then that means the outcome is going to go towards you. Now, if you were like Doug, who picked up trading very quickly, it was very, very, it just basically spoke to me. Trading has always spoke to me in many, many ways. I have a huge fondness and interest in how the market works. But piecing together how this all works was very simple for me. So I came out, even in my early years, as an 8. I was picking up all this very quickly. But when it came to executing, I was very emotional, outcome-based, all the excuses, everything we spoke on, which means I'd typically lose every time. Because if there's no consistency in the middle, it either increases how badly you did or increases how well you're doing. Do you guys see how important that is, those 3 parts, and how they work together? So, for example, if you know too much but have a weak execution, you will notice you become extremely emotional, anxiety, fear, doubt, because your body is telling you, we cannot trade what you see. So please dumb it down so we feel confident in carrying out the task. That part from analytical to process is 100% What part of you are you going to accept that is needed? The one who clearly is slowly learning and has a way to go went straight to logical mind, discipline, what's required to maintain a great habit. Hence, the outcome is always going to be in that person's favor. Then you've got the confident, overconfident person who knows it all and feels that I know it all, so you should just do what I say. They typically lose a lot. When those two people are sitting in a room, who's more cocky? Who's more, I know this, I'm more brash? Which one? Which one? Come on. I love that, Kevin. The loser. But Kevin, does that man feel like a loser or that lady a loser in that room at that time? So that person who assume they know the outcome but never achieve it have done what to their terrible habit every time they act and speak on what they know, but clearly what they can't trade. They further strengthen and reinforce, absolutely, Millen, the bad habit. Now, if that person found humility and said to number 5, let's just call it number 5, and said, yeah, I could teach you and progress you in your training. Could you help me to be a more balanced in my process, to be better in my habits? How much of a change would that make to that person's trading in the near future? A huge amount. Which is going to lead to how I'm going to end this one session, because we're an hour in. When you have all these classes that are presented for you currently for free, with 10 years of experience behind it, these classes are done so that you don't walk around as number 8, but you start becoming number 5. If you stay in the place that you are, if you don't come and learn, if you don't come and ask questions, you are just reinforcing to your mind that we are good where we are. Let's stay undisciplined. Okay, no problem. We love this. It's the most detrimental thing you can do to yourself as a trader, because there's nowhere to turn, there's nowhere to hide, there's no excuses to make, and there's no blaming game. It's you, a mouse, and the computer. You don't have as many resources as you think to help you get to where you want, because you're the only one that can get you there. You can own a business and be lazy, not do much, and just inherently have a great team, a great business partner, a great COO, a great CFO, a great integrator, who can hide all of your inefficiencies because they're naturally just far more efficient. You can't do that in trading. No one's here to save you. No one's here to take you to the promised land. So if you have been trading long enough and you're not seeing the improvement and the progress that you feel that you should have, you got to come to these classes. You've got to send a message to traders who are ahead of you. Ask them, what is it that they changed? What did they do to morph them into a better position, into a better trader? So as you can see, this is our first psychology session. I am just shocked at how much great stuff I have for you. I wasn't expecting to find all this gold, but now I am looking forward to these psychology sessions and helping you guys really maneuver yourselves and manipulate your minds so that you can become consistently better at your habits. Hope you all enjoyed this session. I know I did. It always reinforces to me what I need to know and always make sure to know myself. So let's get back in the room. Thank you all, and I look forward to our next session.